Starting with revenue, there is almost nothing separating these companies today. Micron generated around $90 billion over the latest 12 months, while SK Hynix generated approximately $89 billion. But their historical growth tells a different story. Over the past 5 years, Micron's revenue grew at an average annual rate of around 12%. SK Hynix grew at 25%, more than twice as fast. Over 10 years, Micron grew at around 9% annually, while SK Hynix grew at 18%. Once again, SK Hynix grew at roughly double Micron's rate. That tells us that while the companies have reached almost the same revenue today, SK Hynix arrived here with much stronger long-term growth. Looking forward, analysts also expect SK Hynix to grow somewhat faster. The long-term forecast is approximately 36% annual revenue growth for SK Hynix compared with around 30% for Micron. The difference is not enormous, but SK Hynix has the advantage in both historical growth and expected future growth. The projected revenue numbers are extraordinary, approximately $234 billion for Micron and $361 billion for SK Hynix. However, I would treat those figures as broad market expectations rather than precise promises. Memory prices, supply availability, and customer orders can change these forecasts very quickly. Profitability. Now let us look at profitability. Micron has the better gross margin at approximately 73% compared with 68% for SK Hynix. But after accounting for research costs, administration, taxes, and other items, the difference almost disappears. Micron's net profit margin is around 56%, while SK Hynix is slightly higher at 57%. One additional figure worth including is operating margin. On a trailing basis, Micron's operating margin is approximately 65.6%, compared with around 58.6% for SK Hynix. That gives Micron a clearer advantage in the company's core operating businesses. SK Hynix's trailing net income also benefited from substantial investment and other non-operating gains, so operating margin may provide the cleaner comparison. Looking forward, analysts expect SK Hynix's earnings to grow around 39% annually, compared with approximately 33% for Micron. Therefore, Micron currently has the better underlying operating margins, while SK Hynix has the slightly stronger expected earnings growth. But the broader message is that both companies are producing profit margins that would have appeared almost impossible for memory manufacturers only a few years ago. A quick side note, do consider to subscribe to the channel if you're getting value from this video. Cash flow comparison. Profit is important, but cash flow tells us how much money is actually entering the business. Micron generated around $51 billion in operating cash flow, compared with approximately $48 billion for SK Hynix. That is another very close result with a slight advantage for Micron. However, Micron also spent more heavily. Its capital expenditure was $25 billion, compared with $20 billion for SK Hynix. Micron therefore reinvested around 28% of its revenue into factories, machinery, and manufacturing capacity. SK Hynix reinvested 22%. After deducting those investments, Micron generated around $26 billion in free cash flow. SK Hynix generated $28 billion. SK Hynix therefore produced $2 billion more free cash flow, despite beginning with slightly lower operating cash flow. Its free cash flow margin was also better at around 32%, compared with 29% for Micron. So the cash flow comparison is quite straightforward. Micron currently generates slightly more cash from operations, but it is also spending more heavily. SK Hynix spends less and retains slightly more free cash flow. That does not automatically make Micron's higher capital spending bad. If those investments create more HBM and DRAM capacity at attractive prices, today's spending could support tomorrow's growth. Now we reach what may be the most important part of this comparison, valuation. The two companies have almost the same revenue and broadly similar market values. Micron's market capitalization in this snapshot is approximately $950 billion, compared with around $908 billion for SK Hynix. Their price-to-sales ratios are also almost identical, 10.5 times revenue for Micron and 10 times revenue for SK Hynix. Both companies also offer a trailing free cash flow yield of around 3%. Based on revenue and free cash flow, neither company appears meaningfully cheaper. The difference appears when we look at earnings. Micron trades at approximately 19 times trailing earnings, compared with around 17 times for SK Hynix. Using forward earnings estimates, Micron trades at around 6.3 times earnings, while SK Hynix trades at 4.6 times. On this basis, SK Hynix appears cheaper. But it is important to describe the result accurately. SK Hynix is cheaper based on current and expected earnings. It is not significantly cheaper based on sales or free cash flow. The PEG ratios produce the opposite result. Micron has a PEG ratio of approximately 0.04 compared with 0.06 for SK Hynix, suggesting that Micron is slightly cheaper after adjusting for forecast growth. However, I would not place too much weight on a PEG ratio this low. Both the earnings and growth assumptions are being heavily affected by a historic memory price boom. A minor change in the forecast can change the ratio substantially. Therefore, the valuation section does not produce a knockout victory. SK Hynix has the advantage based on earnings multiples, but price to sales and free cash flow yield are almost a tie. One important caveat is that the SK Hynix valuation figures I just showed are based on its shares listed in South Korea. SK Hynix now also trades in the United States on Nasdaq under the ticker SKHY. These US listed shares are American Depository Receipts, or ADRs, and 10 ADRs represent one ordinary Korean share. In theory, the two listings should have roughly the same value after adjusting for the exchange rate. But recently, the ADRs have traded at a premium ranging from approximately 25% to as much as 38% over the Korean shares. That means an investor buying SK Hynix through Nasdaq is currently paying more for the same underlying company. So, for a US investor using SKHY, the more relevant valuation metrics are the adjusted figures shown on screen. After making that adjustment, SK Hynix still appears slightly cheaper based on expected earnings, but the difference becomes much smaller. Other valuation measures, including price to sales and free cash flow yield, actually favor Micron. South Korean authorities are also expected to make conversion between the Korean shares and the ADRs easier from around July 29th. This could allow investors to buy the cheaper Korean shares, convert them into ADRs, and sell them in the United States, which may help reduce the current premium. Let us now look at what analysts expect over the next 12 months. But just a quick disclaimer, this video is not a financial advice. Starting with Micron, stock analysis gives the stock a strong buy consensus. Its average analyst target is approximately 1,486, which represents around 52% upside from the share price used in this video. Among the more optimistic analyst estimates, the highest target reaches approximately 2,200. That would imply potential upside of around 125%. Market beat is also positive on Micron, but noticeably more conservative. It gives the stock a buy consensus with an average target of approximately 1,264, implying around 29% upside. In other words, Wall Street broadly agrees that Micron has upside. It just cannot agree whether that upside is attractive or extremely attractive. SK Hynix requires a slightly different approach. Its Nasdaq ADR only began trading recently, so analyst coverage of the US listed SKHY shares is still too limited to provide a reliable consensus. For that reason, I have used analyst targets for SK Hynix's ordinary shares listed in South Korea. Stock analysis gives the Korean listed shares a strong buy consensus. Its average 12-month target is approximately 3.26 million Korean won, representing around 77% upside from the local share price used in this video. The most optimistic analyst target across the available estimates implies potential upside of approximately 155%. However, I would treat that as a bullish outlier rather than the most likely result. Investing.com reports a slightly higher average target of around 3.38 million won, implying approximately 83% upside. Its analyst consensus is especially positive, with 36 buy recommendations, 1 hold, and no sell recommendations. Alpha Spread arrives at a very similar conclusion, also implying around 77% upside. This suggests analysts are broadly positive on both companies, but the consensus appears even more bullish on SK Hynix's Korean-listed shares. Now, because ADRs have recently traded at a premium to the Korean shares, an American investor buying the ADR may not receive the same percent upside shown here. Even if the Korean share price reaches the analyst's target, part of the ADR investor's return could be reduced if the current premium narrows. ROIC tries to measure how much operating profit a company earns from the money invested in its business. Micron's ROIC is 68%, compared with around 52% for SK Hynix. Micron therefore has the stronger result. Both companies have an estimated cost of capital of around 9%. This is essentially the minimum return investors and lenders expect the companies to earn for the risk they are taking. Both companies have return well over the cost of capital. The important warning is that these are memory companies operating in an unusually profitable part of the cycle. Returns can rise dramatically when memory prices increase because companies earn more from factories that were already built. Therefore, Micron wins this comparison today, but investors should not assume that a 68% return is a permanent normal level. Both businesses also have very strong balance sheets. Micron has a current ratio of 3.42 compared with 2.62 for SK Hynix. That means both have more than enough short-term assets to cover their short-term obligations, although Micron has the larger cushion. Micron's debt-to-equity ratio is only 0.06, compared with 0.13 for SK Hynix. Both are low, but Micron again has less debt relative to shareholder equity. Interest coverage produces the same result. Micron's operating profit covers its interest expense approximately 258 times. SK Hynix covers it around 93 times. Micron wins all three balance sheet comparisons. Historical stock returns and risk. The stock return comparison is much closer. Over 5 years, SK Hynix delivered an estimated annualized return of around 68% compared with 63% for Micron. But over 10 years, Micron leads with 54% annually compared with 47% for SK Hynix. Both stocks have also been highly volatile. Micron has a 5-year beta of approximately 2.14, while SK Hynix has a beta of around 2.32. A beta above 2 means these stocks have historically moved roughly twice as aggressively as the broader market. SK Hynix has been slightly more volatile. These are not quiet, defensive investments. Strong earnings can send them upward very quickly, but concerns about pricing, supply, or AI spending can send them in the opposite direction just as rapidly. Both stocks drive like sports cars. Unfortunately, the brakes may be optional equipment. Brief business overview. Before eventually reaching a final verdict, it is important to understand what these companies actually sell. Both Micron and SK Hynix manufacture memory and storage products. DRAM is the short-term working memory used by servers, computers, phones, and other devices. NAND is longer-term storage used in solid-state drives and mobile devices. HBM, or high bandwidth memory, is a more advanced form of DRAM placed close to powerful AI processors. It allows enormous amounts of information to move quickly between the memory and the processor. This is currently where SK Hynix has its biggest strategic advantage. In the first quarter of 2026, SK Hynix held around 58% of the global HBM market by revenue. Its share of the broader DRAM market was around 29%. Micron held approximately 22% of the DRAM market, while industry estimates generally place its HBM share in the low 20s range. SK Hynix has deep ties with NVIDIA and recently entered a multi-year partnership to jointly develop memory for NVIDIA's future AI systems. SK Hynix is also developing HBM4E and expanding its advanced packaging and manufacturing capacity. Micron is also supplying HBM4 for NVIDIA's Vera Rubin platform. Micron has signed 16 long-term strategic customer agreements across data centers, consumer devices, and automotive markets. These agreements cover 20% of its DRAM volume and 1/3 of its NAND volume over their terms. Micron also has a strategic technology and supply agreement with Anthropic covering AI memory, storage, and infrastructure design. In NAND storage, SK Hynix holds a market share in the high teens, while Micron held 14% in the first quarter of 2026. The biggest common risk is that memory remains a cyclical business. Another challenge is growing Chinese competition. CXMT's share of the DRAM market reportedly reached around 8% in the first quarter of 2026, although export restrictions may slow its access to the most advanced manufacturing equipment. Tariffs are also a risk, but they require some context. Current U.S. semiconductor tariffs cover a narrower group of advanced products and include broad exemptions for U.S. data centers, consumer products, research, and domestic supply chain development. Micron may benefit from being the only major US-based advanced memory producer, although building factories in the United States is expensive. SK Hynix has the advantage of greater HBM scale, but its heavier exposure to NVIDIA and the AI memory market also creates concentration risk. Final verdict. So, after comparing the two companies, the overall picture is surprisingly close. Micron and SK Hynix currently generate almost the same amount of revenue. Both have extremely strong profit margins, produce substantial cash flow, and carry very little financial risk from debt. Micron has some clear advantages. It currently has the stronger gross margin, higher return on invested capital, and a cleaner balance sheet. It is also much easier for an American investor to buy without worrying about foreign exchange conversion or paying a changing premium for an ADR. SK Hynix, however, has grown much faster over both the past 5 and 10 years. It currently generates slightly more free cash flow despite spending less on capital expenditure, and analysts expect it to maintain somewhat stronger revenue and earnings growth. Most importantly, SK Hynix is currently the clear leader in high bandwidth memory. That gives it a stronger position in one of the most important parts of the AI infrastructure market. Valuation does not give us an easy answer. SK Hynix looks cheaper based on expected earnings when we use its South Korean shares. But for an American investor buying the Nasdaq ADR, the premium reduces much of that valuation advantage. Micron can actually look cheaper based on sales and free cash flow. However, if I have to select one, my preference is slightly toward SK Hynix. The reason is not simply its current HBM market share. It has also delivered stronger long-term fundamental growth, currently holds the leading position in AI memory, and is expected to continue growing somewhat faster in the future. However, the price paid still matters. For an American investor, I would be cautious about buying SKHY while its ADR trades at a large premium to the Korean shares. That is my assessment, but I would also like to hear your opinion. Would you choose the established HBM leader SK Hynix or the rapidly growing challenger Micron? If you liked the video, please like and subscribe. You can find more company comparisons in my playlist here. I will catch you in the next one.